Good day, ladies and gentlemen. All right, we're about to begin. Let's go. Make sure you like, you share. Happy to see you all. Happy to see you. All right, so let's just be ready to backtest and see how we can go over it. It's a Friday, you have to be chilling. Don't be looking at other pairs trying to fidget which one to trade. So I guess the right thing to do at the moment is go through what you already have, and yeah, probably you'll see some results next week. So that's what I'm going to be doing. I'm going to be going over how I trade. I backtest a little bit, then I see which results I get. I'll just go over a few things here and there, then that will give me a way around. So we're about to begin. Just get ready. Okay, I guess it's time, so we can go over this and see how we can go about the market today. Now, I'm using this software called Casa something, Traders Casa. That's what I'm going to be using, and I'll just set it up the way I want. I'll just solely focus on the 15 minutes time frame so that I have the best of the time, and I'll set this to, of course, the 15-minute candle movement. Then I want to get some indicators on my chart, and what I'm looking at is the exponential moving averages. I'll choose 3 of them, and we shall go and set them up a little bit. So the length of the first one, we want it to be a 50 exponential moving average. I just set that up quickly. The color, I'll give you a green. And I'll tell you in a minute why I need this on my chart. Okay, I'll tell you in a moment why I need this on my chart. So this is a 100 moving here, and I'm giving it a yellow, and we shall set the last one. This will be a 200 to be an EMA. Again, this is 200. I'll go ahead and give this a red as its color. So you might tell me, why am I putting these on my chart? So it's very easy. The exponential moving averages, they help you determine the direction of the market. If you are a little bit skeptical, you don't know what the market is really doing. So that's why we tend to put them on our you tend to put them on your screen, just to be able to know that this is the direction the market is taking, or something of a sort. Okay, so let's see. Let's backtest. So I'm starting from January, and let's just keep moving. I don't know if the first day of Jan people traded. I see Jan 1st. People, I don't see the market moving really that much. So I think for better understanding, let's begin from somewhere around 5th probably. I said this was 2nd. Okay, let's look at 2nd. Most of the times when I'm to come on the market, or looking at the market, I look at the market around 9 a.m. and essentially when I come to the market, I want to see, okay, what has gold done in the past few hours, minutes, and then what am I looking for, for that particular session, right? So we see here at 9. Now we realize that when the market is in a place like this, we have a resistance, right? The support, somewhere around there. Then you have another one right here. So all these tell you that the market on the 15 minutes has been moving bullish, and it has broken out of all these zones that were acting as resistance, right? We see the market punching through them. So from market structure you can easily see that the market is bullish. But then if you're not able to identify that the market is bullish from just looking at market structure, that's where the EMAs come in, the exponential moving averages. I told you earlier that we need the 50, the 100, and the 200. And how to read these is very simple. What you do is, when you see that, let me see if I can get a brush or something. Let's see if we can get a brush here. Drawing tools. Okay. So I was saying, when you see the 50 moving average greater than the 100 and greater than the 200, this indicates that the market is bullish. So it is vice versa. When you see the 50 moving average down, the yellow in the middle, and this one up, it indicates that the market is bearish. So if the 50 moving average exponential, to be specific, is greater than the 100, greater than the 200, the market is bullish. But when we see the 50 less than the 100 and less than the 200, that indicates that the market is bearish. Okay, and when we see that we have these not in order, not in this corresponding order, the 50 being greater than the 100, being greater than, you know, the 200, or the other way around, less than the others, but we see these crossing each other, that means that the market is in consolidation, or it is trying to figure out to get a better place for it to, you know, get in momentum or get in trend. So here already, from a market structure point, we are seeing the market being bullish. But then from the EMA's point as well, we see that the 50 is greater than the 100 and greater than the 200, which indicates that the market is bullish. So what do you want to do? You want the market to first retest these zones for you to be able to find your buying position. So let's see. Most of the times, I'm just waiting for the market to either come into these zones or somewhere around the 100 EMA. So let's try to rush the market and see. So you can see we were done for this particular dip. The market did not retrace into the zone. Okay, so this here means, yes, you knew that the market was bullish, but you didn't have a better discounted zone for you to see, you know, to buy. So what does that mean? You wait for another day. So let's still move. We are in a new day. Let's see if we can figure out where 9 is. 9 a.m. of the next day. Again, I said the reason why I look at 9, it's because I'm in GMT plus 3. That's the time that I come at the market, on the market, sorry. So I am always curious to see what the market does. Okay, 9 is around here. Let's see. All right, so, and you can see this is almost 10 of the next day, and there's something interesting. By the time we come on the market, let's on this day, we can see that the market had created a small support around this zone, and it had another support around this zone, and you know, it had created a bit of structures right there. Now again, from a market structure point, we see that here some people say the market wants to change structure, or there is a break of structure, things of a sort. But with the Y trade, I do not change the bias until at least I see a change in bias with the EMA. And of course, most of the times I know people say that how is it called, EMAs move slower and stuff, but sometimes it gives you that liberty to actually get quicker on identifying where to buy or sell from. So again, the bias here is bullish. What we want to do is to see the market come at least and take out one and close below the 100 EMA. Again, not close above but close below, right? So when it closes below, you wait for a bullish candle. So we see that the bullish candle we wanted was formed at this place, and to be very specific, you realize that when it did that, it came and corresponded in one of the zones we were looking at. You see this zone here, and you see the bullish candle formed at this zone. Where do you put your stop loss? Your entry is at the closure of this bullish candle, right? And your stop loss is somewhere where you see an engulfing. So the reason why I chose engulfings is because most of the times the market does not want to take out those places, right? Or the market most likely never takes out those places if it's not going to continue in that particular direction. So I would choose a place like this, and you realize this is about 100 and something pips. And for this one, we would be looking for 1:5 for us to be able to, completely get out of this trade. So another thing that I put in my mind is, if the market reaches around 10 a.m. okay, 10 p.m. sorry, without completely taking me out of the market, I exit that trade for that day. So for example, 10 is at this level here. So what we are going to, where I've just put this cursor. So let's see what the market did during this time. So we can see by 10 it had not yet hit our SL, but it was almost. So what we do, we just take that SL for that day and move on, right? So meaning this trade didn't work out. So that's very, very important. Okay, so let's see the next day. So you realize this would have hit SL eventually, in the due course of the market open the next day. But since you moved out earlier, things would have changed a little bit. So again, that's important. At least you bank in some small loss than losing almost everything you had put on that particular trade. So I'm waiting for 9. 9 is somewhere right here. And what am I looking for? I just have to look at the market and see which direction am I taking for the day. Am I bullish or bearish? And from what we see from the previous day, the market had changed structure. Okay, we can see that at the moment. Let's get the path tool. Where is the path tool found? All right. So we can see that the market had literally shifted structure here, and now it was trending bearish, right? I don't know if you remember the logic I told you with the exponential moving averages. if you cannot see this, that the market has changed structure, there is a way to look at that. I told you, if you see the 50 EMA greater than the 100 and greater than the 200, you just know that there's a bit of change in structure. So in the direction, so here we can see that the market is going to be selling, but we are not very sure as yet, because again, if you are looking at what the market has been doing, it has been keeping on, you know, these EMAs are still in a place of consolidation, like I told you, because now the 50 is here and this is 200 and this is 100. They need to be in correspondence, or in the same relation, 50, 100, then 200. But let's keep moving and see what the market will do. So you realize that again, we marked out these zones where we wanted to sell from, but you realize that by the time these became fully corresponding, the 50 being less than the 100 and the 200, this had already come into the zone. So that's something that I want to see. And I told you that when this happens, at the next candle closure that is of a different color or of a different direction, for example, since I'm looking to sell, these were bullish. So when I see a candle that is bearish closing, okay, this is, let me put it into 5 minutes so that we see well when they close. So this has closed, so this is where I want to sell from. Put my sell there, and my SL, I told you that I always want to put it at the next level where there is an engulfing kind of appearance. For example, these two candles here, these for me, they just work as that place that I want to be selling from, putting my SL. So on this trade, again, I just look for a minimum of 5 to 1. Let's see how this played out. You see how beautifully it hit that TP. Again, if this trade goes beyond 10 GMT plus 3, I'll just close it out. So this is how this trade played out. Let's look for another day. Again, like I mentioned to you guys, I'm just having a backtesting evening, nothing much happening at the moment. So thought we would just go over this together and see what we would have done. The time is 9. I told you I usually come at the market during maybe around 9, and this is 9. So what am I looking for? Again, when we look at the market, it is in a state of consolidation. Just a moment. All right, so I was saying, let me see if you guys are putting out any questions. Let me see. Okay. I'm trying to see if you guys are putting up on anything. Nothing, I see. So let's just continue. So we are on this day, and when you look at the market, it's in a bit of a consolidation. You can see that. So what do we want to do in a place as this, right? Again, it's very simple. we want to wait. But when you look at the EMS, they are trying to cross. Again, when they are crossing, you do not want to do anything. You do want to do something when the market appears right. The 50 being greater than the 100 being greater than the 200, or the vice versa. So that's what you want to do for you to be able to take any trade on that particular day. Okay, so let's keep going. All right, but for some people who are a little bit sharp, again, if you look at here, you realize that the market has been consolidating. Okay, then before London opened, the market broke out of this consolidation. Now it is coming back to retest here, but in the time it is coming back to retest, the 50 moving average is actually trying to go up, right? So what I've seen people who trade like I do most of the times is, for example, during this time that the market drops a little bit down to meet to touch into this, when it flips bullish, right, like that, they can come and put their stop loss at the next level, which could be around this zone, somewhere like that, and they will be targeting again a 1 to 5. But in my opinion, this is a bit dangerous. It can work out, but it's a bit dangerous. Yeah, why is it dangerous? It's because the market has not yet fully, done its thing. Yes, you see, it has worked out, but now a trade I would be waiting for would be now a trade like this, where the 50 is greater than this and greater than that. So for people who have mastered market structure, they can easily see this. Okay, they can easily see this and actually take those particular trades, right? But before that happens, if you haven't yet, let's say, like, mastered market structure, sometimes it's very hard for you to see that actually there's a shift in the market. So it's really, really very important for you to see that and do what is really needed. I would say the market awards people who are patient, people who know what they are doing, they are keeping into their discipline, they are trading right. Because the more you do that, you see a bit of change, yeah, in your trading. So let's wait for 9 a.m. the next day. We are about to get there. We are there now. This is 9. What are we looking for the day? Very simple. Market structure wise, you can see we have a support down here. What do? You have a resistance up there. Simple things, right? But now, having known all that, what again do we want to do? And by the way, we as well have a bit of another resistance right there that the market is trying to play from, because if you can see, we have a consolidation that has been happening in this zone, right? So what do you want to do, or what is your directional bias for the day? The directional bias from market structure wise, if you are able to see that, yeah, is bullish, right? Because the market from here has been moving bullish, and guess what, the market has not yet even broken this last leg that it did. It has not yet broken this, not broken this, not broken this. So what does that mean to you? It means that the market is completely bullish. So what you have to do is keep in the buys. But again, if you're not able to look at that and see it, I've already given you something that gives you the direction of the market. If you see the 50 moving average greater than the 100, greater than the 200, what you do is know that the market is bullish. So how do you take your trades? You wait for the market to come almost near to the nearest zone that you're looking at. And now in this case for me, again, I will not be looking at these resistance zones. I'll be just deleting them, and I'll be focusing on the support zones. Why? Because I'm looking for buys. Okay, these are the zones that I want to focus on. Now let's keep playing and see what the market did during the day. Okay, remember, again, we have this part here which is very, very important, because this was resistance that became support for this price where it is right now. But for me to enter into a trade, I've told you that I always love to see at least price coming and taking out the 100 moving average. That one is very, very important for me, something that I want to see. And from this, you see that the market closed below this and gave us a bullish candle. What do? At the close of this candle, this is where I am buying from, and my SL, I want it below a sort of two engulfing candles, something like this. And what am I looking for? A clean 1:5 on that particular trade that I've taken. But again, I've given you all these things and I've told you there's something that is very, very important for me. I am a day trader. Being a day trader means that there are things that you look at, and one of the things that I look at is by 10 GMT plus 3 I have to be out of all my trades. I do not sleep in any trade. Okay, so this is very, very important. Whether the market hits SL or not, that's very, very important for me. Okay, so you can see that what the market did here came and took us out on the SL I've just put, but we went ahead and hit TP. So meaning the zone we looked at was a correct zone, but we missed a little bit in the pips we had to give it, okay, for us to see the trade, going in the direction that we wanted. But again, trades can take you out, trades can do whatever they want to do, but there's something that is very, very important. Do you know the direction the market is going to? That's important. That's something you don't want to miss out on. That's something you don't want to miss out on. So let me hope you guys are understanding where I'm coming from and where I'm taking you. Yeah, let me hope you can put something up for you guys here that you can look at potentially. Those that want to join my community, we do have a very interesting community that you would want to be a part of course. Okay. So let's keep watching and see what the market did after here. So this is another day, so let's look for another day. And you can see actually that before even 10 the market came, tapped into our zone again and gave people massive profits. We are looking for the next day so that we can take another trade. So this is 9 again. When we get to that next day, I always want to have questions that I ask myself, and these questions are very important. They are very important. I want to ask myself, what am I looking for the day, or what's the bias of the market? And from yesterday or the previous day, this one we were bullish, right? We saw the market give us this amazing bullish move, came back here but did not break this, okay? Did not break that point, came, moved bullish again, and it has not yet again broken this, right? So what am I looking for again? From a market structure point, I'm still looking for bulls. I'm still looking for longs on gold. But if you're newbie, you cannot read structure, I've told you again, there's somehow a way you can do that. When you see the 50 EMA greater than the 100, greater than the 200, that is a way to know that the market is still bullish. So where do I want to buy from? I've told you I've come at the market at around 9. What I want to do is first ascertain what are my places of support, since now I'm looking for buys. Okay, there's that place right there. There is a zone right here. Okay, again there's another zone right here, but I have to be very, very careful about this zone, because if the market comes and breaks or taps into this zone, it's likely that it will keep selling. Why? Because this is the last zone of me looking at, you know, when it breaks this, it identifies a bit of change in the market structure or in the direction of the market. So let's see what the market did after here. Let's see if it came back to any of these zones that we're looking at. Okay, very, very important. Let's see. So the market actually came into the zone we're looking for, but you realize it came in at around 7:30 and we were on the market at 9. So this is a missed trade, but again, we do not have to worry about missed trades. Why? Because that was not in your trading time. So that's why you had to not to take that trade. And now another place we would have got an entry from would have been this one, but you realize this is like 8 p.m. and we have set a rule that we do not sleep in trades, right? So you have to close your trades by, let's say, 10. So you realize that this trade might potentially work out, but again by 10 you have to be out. So probably if someone wants to take this, they can just go in for a very quick scalp and they run out. But all right, so you see 10 is here and you have to move out, right? So here you have to move out. So again, I said this could have been a small scalp, right? A small scalp, but you don't want to do that. If time is gone, just rest and wait for another day for it to trade. So let's see the next day, which would have been 9 a.m. in the morning, how the market would have played out. Okay, let's see. Okay, 9 is here. We are here and this is 9. What are we seeing? The market is still bullish from a market structure point. You see this? Market is still bullish, not broken these zones that we were looking at earlier. So what are we looking for? Still buys. You remember someone who went into this trade, they moved out, but you see the market would have still been in their favor. So what do we want to do? We want to ascertain the resistance and support zones that we can find. But since we are bullish, of course, now we want to see the supports only. I would always urge you to just look at the supports, because if you look at the resistances, that means you are trying to change the bias that you're having. I'm using this software here, so Let's wait for its advertisement, then we can continue. Trying to look at the chat. If I see anything, I'll see how to answer. Let me hope you guys are enjoying, what I'm showing you. Yeah. Let me hope you're enjoying what I'm showing you. Okay, so I've told you I'm looking at a bullish run again, because the market has not yet broken the zones that I'm looking at. So what do I want to see? I want to see the market come and close in those support zones. Okay, so the market is trying to come into that place, and guess what? This was somewhat about, I think this was news that happened. Just checking if everything is right. So you see, this is news that happened, and the market closed into our zone, but that was very fast, meaning we wouldn't have taken this trade. And I wouldn't recommend anyone to take a trade during these news times. But you literally see what we were waiting for was the market to come back here. Our stop would have been probably here, and would have been looking for clean 1 to 5. Let's see how the market played after that. Okay, let's see. All right, so remember I closed my trades again at 10 p.m. GMT plus 3. So by this time I would be out of the market, and that was a clean 1 to 2.5. So that's how we take the trades. Again, on this day, you would have not taken a trade, because I would not deal with this kind of volatility anyway. So I would be very, very, very cautious to take a trade. Probably, if let's say I had seen that news is coming and I wanted to flip an account, probably you could do this, but it's very, very risky again. You don't want to put yourself at a place that is compromising. Let's see, let's go for the next day. 9 a.m. Okay, here we are, 9 a.m. and what are we looking for? Again, first know what is market structure doing. What is the direction of the market for that day? Look, we have bulls in the market, and what have they been doing? They have been playing around, and they have not yet broken this liquidity they kept in these zones, right? What does that mean for us? It means that the market is still bullish. So your bias for the day is still bulls. So what am I looking for? I am saying, okay, what are my support zones, since I am still looking for bullish momentum? And here you go. You have the market create these beautiful zones for you, right? You have the market create these beautiful zones for you. So what do we want to see? We want to see the market come, tap into any of these zones, or kick the 100 moving average close below it, and probably that would signal for us that we needed to get into a trade, right? So you can see the market is coming and just trying to tap into the 100 moving average and not breaking or closing below it. That is something that I'm seeing, but I'm not going to take that trade until I see the break of the 100 EMA, right? You see that? If it can close below it well, then there I'm able to take. Now, I want you to notice something. When that perfect break happens, most of the times, or all the times you've seen in this kind of teaching I'm giving you, we have closed in the zones that we were looking for, which are areas of support, so or areas of resistance. And where do you want to put your stop loss? Again, I said look for an engulfing candle, or these candles that one is bearish, one is bullish, closing at the same zone, and that's where you want to put your stop on that particular trade. So my stop is going to be on this. If let's say you're feeling a little bit skeptical about that place, since liquidity was already being built around this area, the next stop you'd be looking for probably would have been this one here, right? So one of the two would have worked well. So let's see what the market would have done. Again, here you're looking for a 5-to-1. But one thing that is very, very important again to note is when you're taking these trades, you have to be very, very careful with what market structure is doing. The kind of system I'm showing you is very mechanical, meaning that we are just following the trade, the system or the rules we have set to the T, right? But sometimes we can neglect to see what the market is doing. Now, we can see here that the market has been consolidating, right? We can see this is a zone that if it is broken, the market is going to just continue bearish. That is seen, right? Before even we trade, you can see that. Another thing, you can see that the 50 EMA and the 100 are almost next to each other, meaning this is going to move down and this is going to move like this. So meaning we shall not have these correspond anymore. But that's now not something that we are there to predict. But this is something we see that the market might change if we get into these buys. So you need to keep ahead of yourself to know, is actually the market going to change structure? So let's just play here and see what the market did. All right, do you see that? Do you see this? So these are things that we have to be very, very careful about. You see what I've just told you? Again, indicators, sometimes they lag, but they tell you sometimes the truth. I've told you this was going to cross down, this was going to do, and now you'd have got your SL hit, right? Why? Because you have neglected now to see that there is something market structure was doing that your rules-based strategy did not see quicker. So meaning your eyes had to be open to actually see that happen. Okay, guys, let me hope you're understanding what I'm trying to say, because these are things that have to make you profitable, right? At the end of the day, I want you guys profitable. Again, I have a boot camp that is happening from the 24th to the 28th of November. Just make sure that you are joining my Telegram channel, which is XAUUSD Preacher HQ. And when you do, or just click the link in my bio, send me a message on WhatsApp, I'll add you in my free Telegram channel. All those things will be happening there. So do you see this? This is very important. You do not want to mess up. You do not want to mess up. When you see this kind of move happening like that there's going to be shift, you have to know it even before it happens. So why did I show you this? It's because I have fallen on my own strategy that I created. Right? I have fallen into it, and most of the times I'll just take such a buy trade. So you need to be very, very keen to see that the market is changing. So what would you have done in this place when you see this? Instead of taking the buys, you would have taken the sells here, okay? And your stop loss would have been above this point, again to be precise here, and your stop loss So your take profit would be moving it for you. Damn. So you'll be looking for a clean 1:5 on this particular trade. Okay, because the market has changed structure. Something that you do not have to forget, by the time the market reaches 10 p.m. I would want to be out of the market. But now let's see again, see what the market did for that whole day. It kept moving down, and we are here at 10 p.m. I would have moved out of the market with a 2.4 or 2.5. So again, very important thing to note while you're trading, that the market changes every single now and then, and it just requires you to be vigilant, to see what it is doing, and you take that particular direction that it wants you to take. Yeah, let me hope I'm not boring you guys. Okay, let's see if we have any questions coming through. Okay, I don't see many questions. Let's just continue. If I finish Sam's thank you, I can see you. If I can see if I can feel like I've exhausted you guys understanding this concept, I will just end the stream. Okay, so let's go for the next day, 9 a.m. Okay, let's just go for the next day, 9 a.m. Let's go for the next day. And again, keep your trading very simple. One time frame is just very beautiful. Just look at one time frame. There's no need for you to be all over the place. It doesn't just make sense for me. Okay, now this is the next day, and this is the next day. We are here and we saw that the market was bearish. What we want to do is, again, from the market structure point, what do we want to see? Or what do we see? Oops, let's just wait for that ad to finish up. Then I'll take you guys again into this. Just give it those 30 seconds. In the 30 seconds, you can probably sip a cup of tea or water like I'm doing, and we can continue. Commercial break. We have a boot camp happening on the from the 24th to the 28th. Those are 5 days. I'm dedicating at least 2 hours a day to teach you guys about the market. So just make sure that you DM me, link in bio, just click. You'll see my WhatsApp there. Tell me, hey preacher, I want to join your bootcamp, and I'll be giving you the details. It's completely free. We do not charge you any single coin. So let's go again over this. From the market structure point, we can see that this has been bearish. It has not yet broken this zone up here, right? But the market could potentially go back there, right? So what do we want to do at the moment? Very simple. We want to see, since we see now that we are bearish, we want to look at our EMA. What is it giving us? 50 is less than 100, less than 200, meaning that the market is going to continue going down. That's potentially what we see, okay? Unless the market changes direction. But for now, we don't see that. So what do we wait for? We are looking for our resistance zones that we could potentially be looking at. One is right there. Another is right here, okay? So let's play and see what the market did. So most of the people just don't understand the market and what it does, right? So I said, for me to be able to get into a trade in any resistance zone or support zone, I need to at least see the next candle being of a different direction, the direction that I want to do. For example, if I'm selling, I want to see a bearish candle print. Now, this is beautiful. Market came into my resistance zone, and what is it doing? Give me this perfect candle that I'm looking for, and I'm very happy for it. Where am I putting my stop loss? Now, for the stop loss, you know how I'm doing it. We are looking for some engulfing candles. So this could be one of those. This could be one of those. But this looks a little bit risky, right? So some people would have put it here, which would be nice. And another zone that is nearest is somewhere around here. Okay, somewhere around here. So this would have been 70 pips. 70 pips is just okay for intraday. And you'd be looking for something like a 5 to 1, right? 5 to 1. Now, I want us to be again vigilant, right? So we said someone would have put it here, and another person would have put it right there, right? So let's see what the market did. Okay, the market moved down, came, tapped into that zone, tapped into it again, and guess what? The market for that day took out our stop loss, right? Took out our stop loss. But you realize that someone who had put it here would have been taken out, and their taking out would have happened. Now, there are things that you do not want to experience as a trader. There's something we call a trader's heartbreak. You've put here your stop loss, right? And you're looking for your 5 to 1, which is around this area. Guess what? The market comes, gives you a 1 to 2, comes back here and takes you out, moves back down, doesn't hit your TP, takes you out. You see that? That's something that the market would have done to that kind of trader. So that's why you need to be very, very careful and know where you put your stop loss. Because right now, the market, even if it took us out, right, at this area, at this zone here, it's okay. But remember our rule. We move out of the market at 10, whether we are in loss or profit. You've realized by the time 10 would have reached, we would have been almost in a drawdown of less than 25% of what we were risking on this trade. So if we were risking, let's say $1,000, would be in a loss of like 250 and would be out of that trade. And even before getting out, we would have seen that this market was already stalling from it. This week it did here, okay, from the week it did here to moving down to giving us all these bullish candles to seeing the EMS give us the zigzags. This would have told you that the market is going to keep going up. So we would have moved out of this trade without a loss. Okay, again, these things that I'm teaching you here are very, very important. These things, they keep you profitable. You don't just take a trade and just let it happen, let it just go. Trade management, it is another skill that traders need. All right, I'm giving you guys more 2 days and the stream will be done. More 2 days and the stream will be done. All right, 9 is here. Okay, 9 is here. So we've come at the market at around that time, and we are looking at the market at that time. Okay, what are we looking at? What's the market structure like? Those are first questions that I always want to see, for you to have in your head. We can see we had a resistance there, market tapped in, moved down, tapped in, moved down, tapped in, moved down, tapped in, moved down, broke out, retested, moved up. What does this show you? Shift in market structure. The market is bullish. Very simple. Okay, so if you can't see that, how do you see that the market is bullish? I've already told you how Preacher does it. 50 moving average is greater than the 100, greater than the 200. What does that mean for me? The market is bullish. All right, very simple. So what do I want to do right now? Since I'm bullish, I'm going to look for my support zones. Okay, what are my support zones? I can see that this was a resistance that was broken. All right, and now this resistance has become support. Okay, that's my first support. What is my second support? This was a resistance again broken, and now it has become support. Where is my other resistance? Sorry, support. We can see something around here. So what do we want to do? What we want to do is wait to see where the market goes in this particular moment in time. So we just keep playing and see what the market did. All right, the market kept moving up and down. Let's see. Okay, so almost closing out on the day. Again, the market has come tapped into this zone, but however much it taps into this zone, I do not buy. Why? I have a confluence that I've always told you. That confluence is the market has to close below, sorry, the candle has to close below the 100 moving average for me to be able to take that trade. Okay, and guess what happened? We got this beautiful candle close. Okay, so let's see what the market did, and it closed bullish right here. So this would be a trade that would have been worth wasting our money on. Where is your stop loss? The nearest, most visible, vivid, candle that you see that will not be taken out, that is an engulfing. So that's where I put my stop loss. Again, remember, by 10 GMT plus 3, you'll have to be out of this market. So see what the market did. Boom, 10, and this was a good trade. 1:1.9, almost 1:2. So meaning if we reached 1%, would be out of this market with a 1:2. Okay, so guys, that is how simple an automated kind of strategy would be making you money. Okay, many people are sitting there trying to look for things up and down, but this is just one way you could capitalize on the market, by using an automated strategy. So let me hope this is making sense, right? Let me hope this makes sense to you. I told you I'm doing one more and I'll be done for the day. Let's go. Okay, we are going to be looking for the next day. So that's 9 a.m. GMT plus 3 again. That's the time I wake up to look at the market. So very important. That's the time I want to look at the market. Guess what? This is 9 a.m. I'm here, and what do I see? Market structure wise, what do we see? Okay, very important. Market moved up, created that, did not come back to break this one, came, broke this one, moved up, a bit of stalling around that area, and we are here. We have not yet broken this major point. We have not broken this major point. So that indicates that the market is bullish. But if you can't find that as a newbie, what again do you look at? 50, 100, 200, they are greater. The 50 is greater than the 100 and this. So that would literally indicate that the market wants to keep going bullish. Okay, so again, where do we take our trade from? I told you if the market does not break below this 100 moving average, I do not take that trade. So however, you see, for some people who are a little bit greedy, let's say, they would have taken their trade. Oops, let's wait for that commercial break to go off. Then I'll show you what we would have done. But yeah, we are having a boot camp, guys. Make sure you are a part of that. It will be very, very amazing, very, very beautiful. And I hope that you like it. Probably. If you don't like it, it's okay, right? If you don't like it, it's okay. But we have a boot camp happening. Just make sure you're part of that. Make sure you're part of that. Just find the link in my bio. Send me a DM. I'll make sure to give you access. Okay. Good. Let's see if the commercial break is done. It is done. Commercial break. Commercial break. Let's go. So I was saying that people who are a little bit greedy, they would be like, this is it. Let's get in from here. Where's your stop loss? Right below here. Okay. Where's your TP? Of course, I look for 1:5. Good. When do you move out of the market? By 10, I'll be out. And look at what the market did. Gave them a serious move right there. So they would have moved out of the market with almost a 1:1.7, but I would have not taken this trade. Why? Because it did not fully meet my confluences. What did I want to see? I wanted to see this particular candle come and close below this 100 moving average, and that's not just it. When it closes below, I need to see the next candle being printed bullish. Okay, if I had seen that, I would be very more than willing to put here my take profit, pull my stop loss here, and ride this, right? I'll be very, very happy to do that, but that didn't happen. So what would have happened in that case is me not taking that trade. So I've done my part for the day, guys, given you what I was thinking that I would have taken on this. This is, by the way, January. I've been backtesting for you. It is the first time I've backtested it as well, from the time it happened. So let me hope you have liked the stream, you've shared, and of course you followed, and probably you have as well entered into our free community, which is at XAUUSD Preacher HQ. The link is just in my bio. Just tap on that WhatsApp and say, yo preacher, I want to join your free Telegram community, and guess what, I'll just give you that link. Anywho, that has been our backtesting session for the day, and I'm really, really super excited that you guys have been here and probably have enjoyed it. Allow me say good night and bye bye, so that you can enjoy your week in a very, very absolute amazing way. Okay, yeah, allow me as well go have a very good night. So thank you guys for attending and being a part of this. Make sure to be a part of the bootcamp that is happening. Tomorrow we can probably come on during the day to backtest a little bit of February or something and see how things would have gone. So again, thank you and have a good night.